Hello everyone, this is Doc from the Wealth Boardroom. Welcome to the channel. We're embarking on a journey of paramount importance, a journey that paves the way towards building generational wealth. As the Bible verse Proverbs 13:22 reminds us, a good man leaves an inheritance to his children's children. Understanding the difference between assets and liabilities. This journey, let's consider an example to comprehend it better. Buying a pair of Nike Air Jordan shoes for $146 can be seen as a liability. It's an expense that doesn't bring any return. On the other hand, buying Nike stock for $101 that pays dividends can be considered an asset. It's a stepping stone towards wealth creation. Assets are your warriors in your wealth building journey. They include real estate, stocks, and businesses. Liabilities, on the contrary, like debt and expenses, act as stumbling blocks. It's crucial to Proverbs 13:11 here. Wealth gained hastily will dwindle, but whoever gathers little by little will increase it. Today, we're going to explore this intriguing topic further and provide you with some practical tips on how to steadily build generational wealth. First, let's define some key terms. Assets and liabilities. Assets are resources that appreciate in value or generate income over time. They're the golden geese of your financial landscape, steadily laying golden eggs. Think of assets as your financial allies, working silently in the background to boost your net worth. These include tangible items like real estate, where the property value can increase over time and provide rental income. Other examples are stocks and bonds, which offer a share in a company's profits or a fixed rate of return. Business ownership is another form of an asset, where the profit generated can contribute to your wealth. Even intellectual property, such as patents or copyrights, can be considered assets, as they can generate revenue through licensing or sales. On the flip side, we have liabilities. These are financial obligations or expenses that detract from wealth accumulation. If assets are the heroes in our financial story, liabilities can be seen as the villains. They're the financial drains that take money out of your pockets. Liabilities include things like debt, mortgages, consumer loans, and any other financial obligations that require outflow of money. Imagine your wealth as a bucket of water. Assets are like the rain, filling up your bucket over time. Liabilities, on the other hand, are the holes in the bucket, letting the water drain away. The larger the hole, the faster your wealth drains away, and the more holes you have, the harder it is to keep your wealth bucket full. So, how do we apply these concepts to wealth building? It's simple. You want to acquire as many assets as you can while minimizing your liabilities. Think of it as a scale. On one side, you have your assets, and on the other, your liabilities. The goal is to make sure your assets outweigh your liabilities. This is the foundation of building wealth that not only benefits you, but can also be passed down to future generations. With these definitions in mind, it's clear that the path to generational wealth involves prioritizing the acquisition of assets and minimizing liabilities. Now let's delve into how to amass wealth via asset-based approaches. First, we have real estate investment. Owning property, whether residential or commercial, opens up a wealth of opportunities for wealth accumulation. Properties tend to appreciate over time, and if rented out, can offer a regular income stream. Additionally, real estate comes with tax benefits that can further bolster your financial standing. By investing in properties with growth potential and positive cash flow, you're not only amassing wealth for yourself, but also creating a tangible asset for future generations. Secondly, we turn our sights to the stock market. Investing in stocks implies buying a slice of a company's future triumphs. When the company profits, so do you, through capital appreciation and dividends. However, bear in mind that the stock market is not a quick scheme to riches. It necessitates meticulous research, diversification, and above all, patience. By comprehending the power of compounding returns, you can witness your wealth grow exponentially over time. Embracing commodities such as gold, silver, and oil is another asset-based strategy to be considered. These commodities often retain their value over time, providing a solid hedge against inflation. They can serve as a reliable foundation in your wealth-building journey, making them a wise addition to your asset portfolio. Next, let's ponder entrepreneurship and business ownership. Starting or acquiring a business is akin to planting a seed. It demands time, effort, and resources. But once it sprouts and grows, it can yield a continuous income stream. A successful business is a lasting asset that creates not only through revenue, but also through providing employment opportunities for others. It's a legacy that can be passed from generation to generation. Finally, let's not lose sight of the value of education and skill development. This is an investment in yourself. By bolstering your skills and knowledge, you boost your earning potential and unlock greater career opportunities. It's an asset that can't be taken from you and can adapt and evolve with the shifting dynamics of the economy. Each of these strategies, real estate, stocks, commodities, entrepreneurship, education, offers unique benefits, but they all share one common characteristic. They are assets. They put money in your pocket, they appreciate in value, and they can generate income over time. Remember though, building wealth is not a one-size-fits-all procedure. It calls for strategic planning to set clear financial goals. It requires risk management to diversify investments and safeguard wealth against unforeseen circumstances. It demands discipline and patience, allowing investments to compound over time. And it necessitates continuous financial education to broaden your financial literacy and equip future generations with the knowledge and skills to manage wealth responsibly. These strategies, when employed wisely and patiently, can serve as potent tools for wealth accumulation. They can alter your financial trajectory, helping you transition from living paycheck to a life of financial freedom into generational wealth. So, whether you're just commencing your wealth-building journey or seeking to enhance your existing financial strategies, remember the power of assets. Prioritize their acquisition, minimize your liabilities, and watch as your wealth burgeons, not just for you, but for the generations to come. So, how can we use asset accumulation to build generational wealth? Well, it all begins with strategic planning, establishing clear financial goals, and developing a roadmap to achieve them. Know what you want, make a plan, and stick to it. It's as simple as that, but the implementation requires discipline and patience. Investing isn't a sprint, it's a marathon. Now, let's discuss how assets can increase one's wealth every day. Simply put, assets appreciate in value over time. This means that the owner's net worth grows not only when they are actively working or investing, but even while they are sleeping. The secret lies in the intrinsic value of an asset, which can increase over time due to various factors such as market demand, economic growth, and inflation. Therefore, purchasing assets is not a one-time benefit, but a continuous wealth-building machine. Risk management is another crucial aspect. Diversifying investments and managing risk to safeguard wealth against unforeseen events is key. It's like the old saying goes, don't put all your eggs in one basket. Spread your investments across different asset classes like real estate, stocks, and businesses. This way, if one investment doesn't perform well, the others can help cushion the blow. Now, let's talk about discipline and patience. These are two virtues that can make or break your wealth-building journey. The temptation to splurge on liabilities or hasty financial decisions can be strong, but resist it. Instead, exercise discipline in your spending and investing habits. Be patient and let your investments grow over time. Remember, Rome wasn't built in a day, and neither is wealth. Financial education is the last, but certainly not the least, principle. Continuously expanding your financial literacy equips you with the knowledge to make informed decisions. It empowers you to navigate the financial landscape effectively and avoid potential pitfalls. Moreover, imparting this knowledge to future generations is invaluable. It equips them with the skills to manage wealth responsibly, ensuring the preservation and growth of the wealth you've built. By prioritizing asset acquisition and prudent financial management, you're not just building wealth for yourself, you're creating a legacy of prosperity for your descendants. You're setting the stage for your children, grandchildren, and even great-grandchildren to have a financial head start in life. That's the power of generational wealth. In essence, building generational wealth through asset accumulation is about more than just money. It's about creating a secure future, fostering financial literacy, and leaving a lasting legacy. It's a journey that requires strategic planning, risk management, discipline, patience, and continuous learning. By focusing on asset accumulation and these key principles, you can lay the groundwork for sustained financial growth and prosperity for future generations. Remember, when it comes to wealth, it's not just about the here and now, it's also about purchasing assets that increase in value over time, thereby setting the stage for a prosperous future for you and for those who follow in your footsteps. Building generational wealth is not a get-rich-quick scheme. It's a journey that requires knowledge, strategy, and discipline. We've navigated this journey today, shedding light on the fundamental differences between assets and liabilities. Assets, the wealth builders, put money in your pockets and appreciate in value over time. Think real estate, stocks, bonds, businesses, and intellectual property. Liabilities, on the other hand, are the wealth drainers that take money out of your pockets. Debts, mortgages, and consumer loans. We've also explored some potent strategies to build wealth. Investing in real estate can create opportunities for appreciation, rental income, and tax benefits. Participating in the stock market allows you to own a slice of profitable companies and benefit from capital appreciation and dividends. Entrepreneurship and owning a business can generate income, create value, and build equity. And investing in education and skill development enhances earning potential and career opportunities. But remember, accumulating assets is just half the battle. The other half is about strategic planning, risk management, discipline, patience, and financial education. Establish clear financial goals and develop a roadmap to achieve them. Diversify your investments and manage risks to safeguard your wealth. Exercise discipline and patience in your financial decisions, allowing your investments to compound over time. And never stop learning. Expanding your financial literacy is crucial to managing wealth responsibly. In essence, building generational wealth is about creating a legacy of prosperity for your descendants. By prioritizing the acquisition of income-generating assets and minimizing liabilities, you can lay the groundwork for sustained financial growth and intergenerational prosperity. It's not just about you, it's about the generations to come. Thanks for joining us today. If you found this information helpful, please subscribe to the Wealth Boardroom for more insights on financial success and wealth building. Remember, the journey to generational wealth starts with a single step. Take that step today. Until next time, this is Doc, signing off. Let's bring everything we've discussed so far to life with a real-world example. Meet John, an ordinary guy with an extraordinary vision. John wasn't born into wealth. He was a regular middle-class individual who decided to break the cycle of living paycheck to paycheck. He started by educating himself about finances, investing, and the power of assets. He understood that assets are the key to wealth creation and began his journey with a clear plan. John started small, investing in a duplex property. He lived in one unit and rented out the other, using the rental income to pay off his mortgage. This was his first asset, a property that not only provided him a place to live, but also generated income. As he built equity in this property, he used it to leverage and acquire more real estate. Simultaneously, John started investing in the stock market. He didn't have a lot of money to start with, but he was consistent. He understood the power of compound interest and the importance of consistency. He invested in blue-chip companies that paid dividends, reinvesting those dividends back into the market. Over time, his portfolio grew, and so did his wealth. John also invested in himself, enhancing his skills and knowledge. He started a small business in his field of expertise, creating another stream of income. This business eventually grew, providing him more opportunities to invest and accumulate assets. Fast forward 30 years, John is now a multi-millionaire. He owns several properties, has a diversified investment portfolio, and runs a successful business. He's not just wealthy, he's created generational wealth. His assets will continue to generate income and appreciate in value, benefiting his children and grandchildren. This case study, the story of John, illustrates the power of asset acquisition in building generational wealth. It's not about overnight success, but consistent discipline and strategic actions over time. John's story is a testament to the principles we've discussed today. Remember, the journey to building generational wealth begins with understanding the power of assets and taking that first step in the right direction. Now, it's your turn to take that step and start your journey towards financial freedom and generational wealth.